Getting into the stock market might seem like a piece of cake, but picking the right stock can be a daunting task. Even when you manage to pick the right stocks, most companies pay out dividends every 3 months, but bills aren't paid quarterly. What if I told you some stocks pay dividends monthly? Of course, you know that already. But do you know there are some pretty lucrative ones that offer over 7% in yield? With very little capital, you can earn a steady income of $2,000 every month without breaking a sweat. Eager to know these stocks? Stick with me to the end of this video, as I'll share 5 fantastic monthly dividend stocks that can conveniently cover your bills and how much you need to invest. Ready? Let's dive into it. Hold on a second. I am not promising a jackpot here, but if you're aiming for some crazy high yields, why not put it in booze? I mean, where else would you get 40%? Because many people often make a common mistake when it comes to investing. They become enchanted by the promise of high yields and hastily jump into investments without careful consideration. Investing in stocks simply means investing in a company. You become a shareholder. You become part of either its success or failure. So, do not get carried away by the figures while overlooking other important factors. Impulsive decision-making often leads to disastrous results. With the current statistics showing that more than 80% of traders lose their investments yearly, avoid becoming part of that statistic. When hunting for a stock that can earn you passive income, don't just chase the highest yields. Pay attention to how stable the stock is, especially when it comes to yearly returns, historical records, debt ratio, the management of the company, and finally, the company's potential for growth. So, what are these 5 monthly dividend stocks that you can invest in without breaking the bank? Number 1. Main Street Capital Corporation, Maine, with a huge dividend yield of 7%. Main Street Capital, a business development company, BDC, is recognized as one of the leading high-dividend stocks. With a well-established history dating back to the mid-1990s, it has never reduced its monthly dividend since its inception in 2007, not even during terrible economic downturns. This remarkable consistency demonstrates the company's ability to effectively manage and sustain its payout ratio. Investing in a stock that offers a generous 7.0% annual return on investment simply means living rent-free. This should be good news since you're getting a substantial annual payout relative to the stock price. Now, how much do you need to invest to get a monthly payout of about $2,000? A simple way to calculate this is by dividing the desired annual income by the annual dividend yield. 2012 divided by 7% equals $342,857. So you'll need just about $343,000 in investment, including all the associated fees. Maine checks all the boxes for a dividend-paying stock that can be considered a wise investment. It offers security and can be confidently chosen as a safe option for your investment. Main Street Capital's portfolio comprises investments in over 150 companies, primarily through high-yield loans. This diversified approach reduces the overall risk of the venture. In addition, the company places a strong emphasis on first-lien secured loans, providing an added layer of protection in the event of borrower default. With this conservative strategy, you can be confident as an investor that your invested funds are secured. What an eloquent advertisement. Maine should pay me for that. Or don't you think I'm a good marketer? I won't charge much. $1,000 per ad is okay. I can manage that. Let's check out another monthly dividend stock. Number 2, Gladstone Investment Corporation, GAIN, with a dividend yield of 7.6%. Established in 2005, Gladstone Investment Corporation is an externally managed business development company, BDC, that primarily provides equity and secured debt financing to small private businesses. What differentiates GAIN from its peers is that approximately 1/3 of its portfolio consists of equity securities. GAIN's monthly dividend is sustained by the interest generated from its loan portfolio. The portfolio primarily consists of first-lien secured debt, which offers a safeguard in case borrowers default. This has allowed the company to consistently pay out dividends since 2010. In addition, the company has been known to go beyond its regular dividend payments by occasionally paying out additional dividends derived from the capital gains made through investment exits. Isn't that just what you were looking for? With a promising dividend yield of 7.6%, this stock should be on your list. To have this company pay your monthly rent, you will need $315,789 invested. The portfolio of this company consists of 25 companies from various industries, which offers relatively limited diversification compared to its competitors. However, the company's management is actively involved on the boards of its portfolio companies with the goal of creating value. Since its public offering in 2005, Gain has invested in almost 60 companies. Despite its smaller size and a high proportion of equity holdings, Gain maintains a relatively low level of leverage to mitigate risk. This prudent approach has contributed to its solid track record of performance. This makes it a stable stock for you to start receiving passive income for your rent. The next stock I'm about to share might be your best bet. The company majors in one of the most lucrative trending sectors in the world, and that's entertainment. But not your regular entertainment. Let's check it out. Number 3. EPR Properties. Offering an average of 6.45% dividend yields. EPR Properties is a real estate investment company that focuses on acquiring and owning a diverse range of entertaining properties. These properties include movie theaters, dining and entertainment venues, ski resorts, gaming centers, etc. You might wonder, how does the company make money? One unique and interesting thing is how the company engages in agreements with the individuals responsible for the operation of these establishments, and these agreements are known as triple net leases. Essentially, this implies that the individuals managing these establishments are obliged to handle all aspects, such as insurance, maintenance, and taxes, while EPR Properties sits back and receives the rental income. In other words, this company holds ownership of several notable recreational spots, and it's clear the company will remain successful as long as Gen Z keeps doing their thing. So if I were you, I'd jump right into it. To consistently cash out $2,000 every month, you'll need an investment capital of $372,093. With the effect of the COVID-19 pandemic on EPR Properties and other experiential real estate, it temporarily suspended its monthly dividend in 2020. However, in recent years, many of its tenants have gradually returned to normal operations, and some are even experiencing increased demand for in-person social experiences. And because of this, EPR Properties has once again started paying monthly dividends. Another monthly dividend stock that can pay your rent is Realty Income, offering 5.6%. If passive income is truly your goal for investing in stocks, then Realty Income is just what you have been searching for. Realty Income has earned its reputation as a reliable stock, making it a favorite among income-focused investors. Realty Income is a real estate investment trust that focuses on investing in standalone, single-tenant properties in the US, Spain, and the United Kingdom. What sets these properties apart is that they have what's known as N&N leases, where the tenant assumes all responsibilities and expenses related to the property. Essentially, it's like having a live-in caretaker for your property. When it comes to monthly dividend stocks, Realty Income proudly refers to itself as the monthly dividend company, and with good reason. Since 1994, they have been consistently delivering monthly dividends, boasting a remarkable record of over 635 months of consecutive payments as of May 2023. Over the years, they have increased their dividend more than 100 times, demonstrating steady annual growth of 4.4%. This impressive track record of over 25 years is convincing enough to make this company your go-to investment. How much do you need to invest to cover your rent? Let's assume you want to include some other bills, totaling a sum of $2,500 needed monthly. 2,512 divided by 5.8% equals $413,793. That's how much you'll need to invest $413,793. And lastly, we have Stag Industrial. Stag Industrial specializes in owning industrial real estate, including warehouses and light industrial facilities. These properties have seen a surge in demand due to the pandemic's impact on e-commerce and increased manufacturing activity. This surge has kept occupancy rates high and driven up rental rates, resulting in a consistent rise in rental income for Stag. Currently, Stag's dividend yield is 4.08%. So, to earn $2,000 in dividends per month, you'll need $588,235 in your portfolio. That isn't really much, considering you don't have to worry much about losing your money. Stag Industrial has a strong track record of increasing its dividend, largely attributed to its continual growth of the real estate portfolio. Just in the last 10 years, the company has acquired over 400 properties, expanding its portfolio to include over 500 buildings. And it's expected that this expansion trend will continue as Stag plans to acquire properties worth $1 billion annually. Alongside the increasing rental income generated from its existing properties, Stag is well-positioned to continue raising its dividend. However, don't expect the company to jump from 4.08% to 20%. Be realistic in your expectations. Well, if you invest in my fabulous advertising brand as a startup company, I promise you a jaw-dropping 40% return every single week. Hold it. Just kidding, of course. That's too good to be true. Some housekeeping rules before we end today's video. Note that when it comes to monthly dividend stocks, the amount you receive is directly tied to the value of your investment capital. So if you're aiming for monthly dividends that can cover all your bills and won't have to work again, focus on growing your investment portfolio. As your investment grows, the portion of dividends you receive increases as well, and that's how you create a passive source of income.